Hey guys, welcome back to the channel. Today we'll be looking at the DoorDash IPO and whether seeing that investing in this company at its IPO will be really worth it. So for those you guys who don't know, DoorDash is a food delivery service and they've recently set up an IPO coming later this December. And also if you enjoy this regular content, consider subscribing. Let's get on to the video. So let's just answer the question. Is this just a cash grab? To me, it seems that DoorDash is simply just trying to be at the right place at the right time. So right after the news of the vaccine hit a week ago, it's just trying to cram in as much cash as possible that it can generate before the vaccine becomes widespread, overpowering the pandemic. So the pandemic has been really the only thing going DoorDash's way in increasing revenue to like a top in the first time since basically the start of the company, but it is still losing money and has been continuously losing money since its starting in 2013. And once this pandemic is over, it loses all its edge. It basically loses all its revenue streams because the appeal of having delivered food loses its shine because everyone would once again can start going to restaurants and start eating outside. So especially with this target price of actually it's $95 a share. So especially with this target price of $95 a share, and they're still unable to generate really a single cent of profit, it just simply looks like a cash grab. Just a note, they managed to have 1 quarter of profit in the last 7 years, and that was in quarter 2 or 3 this year. But even after that, they have once again gone into loss again. So the company itself, as previously mentioned, the company has only performed well this year due to the pandemic, and due to that, there's been an increasing number of food deliveries. However, after this pandemic, basically all its edge will be gone and it's lose its appeal. So this company really has no moat. There's a lot of competitors that it has to face and doesn't have anything really ahead or new or better over its competitors, and it's still unable to make any profits in the best possible environment. And the best possible environment right now is that increasing number of food delivery service. But even with all of this increasing revenue, it's unable to make any profit. And even with this best possible environment set to be on the decline, especially with the vaccine, it doesn't seem like this company is going to be profitable anytime soon. Also, many of its competition can offer the same service for free or at a discounted price. Companies such as Grubhub or Uber, or like even companies such as Domino's or Pizza Hut or something like that. So these companies provide either their service for free or at a reduced cost. So the company's terrible financials. Like every other delivery service, DoorDash is currently losing money. Although it returned one quarterly year of profit this year, the company lost $149 million through the first 9 months. And this is compared to the additional $534 million that they lost during the same period in 2019. So even with this extra $400 million of revenue, it is still unable to make any profit. And the company's itself said that although we've generated a net income of 23 million for the first 3 months that ended in June 30th, 2020, and this was the one term of quarterly profit that they returned, we have incurred net losses in each year since our founding, and we anticipate increasing expenses in the future, and we may not be able to maintain or increase profitability in the future. And the scary thing about this is that the company itself admitted that. So the company itself has said that even with the best possible scenario, we're unable to make money, and in the future we have no reliability to maintain or increase. So they can't increase their profitability, but they have also said that it's not reliable to even maintain it. And they've also said that they've incurred net losses in each year since its founding, and they anticipate increasing expenses. So at this rate, the company doesn't look like it's going to be profitable anytime soon. So let's see versus its competitors. So the DoorDash profitability versus its peers in the trailing 12 months. Just a note that NoPat is a net operating profit after tax. So just to mention, we can see that Yum Brands has the highest NoPat margin of 24%. while Lyft has the lowest at 57. But we can still see that even in the best possible scenario, you have competitors such as Papa John's, FedEx, United Parcel, Domino's, and Yum Brands. All of these are able to make some sort of profit even in these scenarios, even with this COVID crisis. How with DoorDash, things such as FedEx and United Parcel, they would have suffered during this, yet are still able to make a profit. But DoorDash, where business is supposed to be booming right now, it is still unable to make any profit. Also, DoorDash's biggest formidable rival, which is Uber, we can see it had a NOPAT margin of negative 34%. It is still a bigger company and has more money and is still it has deeper pockets, so it has more money in the bank and is will be able to sustain greater losses before impacting the core business itself. Also, switching costs. So the thing is that there's so many competitors in the field right now that switching from one to the other is really simple because there's no real switching costs in place. So we can see that the DoorDash's customers using other delivery service between quarter 3 in 2019 to quarter 3 in 2020. And we can see that the customer switching rate is on the rise even in this COVID time period, where they were supposed to be the largest basically delivery service and have the biggest edge. You can see that almost 10% of the customers go to Postmates, close to 15, peaking at 20% go to Uber Eats, and almost 25% are at Grubhub. So they've lost almost 50% of their customers simply to all of their competitors. So we can see because of it has no economic moat or no benefit over competitors, it just simply seems like there's nothing really going this company's way, even in the best possible scenario. So let's talk about the business model. The worst thing about this business is that the model fights with both suppliers and competitors. So many of the restaurants whom DoorDash delivers actually dislike them because they take 20% of the order. And once the economy returns to normal, restaurants can return to 100% capacity and profitability, which means they'll be no longer paying delivery services such as DoorDash, and they will start opting out of delivering through DoorDash. And as previously mentioned, many competitors such as Grubhub, or as we mentioned before, things such as Postmates, Uber Eats, or Grubhub, have the same services as DoorDash, yet provide a discounted price or even for free, as we can see with Yum Brands and Domino's Pizza. And they also tend to work better by taking a lesser amount of they also work better with suppliers by taking a lesser amount of order sales. So Grubhub, Postmates, and Uber Eats, they don't take 20% of the order, they take a slightly lesser amount. And because of this, basically the relationship between the supplier and the delivery service is a bit better, which means there'll be a lesser chance that these companies will try to opt out even once this COVID thing is over. So in conclusion, DoorDash is an unprofitable business that just seems to try to make quick cash by having an IPO before the sales start to plummet because of the vaccine. And the business has only really succeeded during this time due to the COVID crisis. And without it, it is basically done, as we can see in 2019, where it lost $600 million. And even with the vaccine coming to play, it seems like everything is over because the COVID crisis will be finished faster, everything will be getting back to normal, and most of its suppliers or restaurant chains or stuff like that will be opting out of this because they would like to keep 100% profitability. And this company, as I already mentioned, has no moats and no edge over its competitors, and anyone really investing in this IPO, it kind of seems like you're wasting your money. Unless you're trying to do some sort of option trade. In that case, it is a way to make money. And the company itself has admitted to losing money, and the revenue in the future isn't exactly reliable, and all of this is coming from the company itself, so it is something to take into account at a very high standard. And all of this like negativity combined with a very competitive environment just seems like a recipe of disaster for this company. So all in all, I do think that this IPO is nothing special, and I suggest to stay away from it. Thank you.